please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Market is respecting yesterday's lows. It's not building much on that, but at least the low is being protected. 10,069 was the low, and 10,094 is what we have. Yesterday's low, of course. 10,094 is what we have. IDBI Bank is at the high point of the day, and Jet Airways is surging. So that stock also at high point of the day. Good time to invite our technical experts back, Ashwani Gujral and Mitesh Thakkar, and of course Sandeep Bagle is also with us. Ashwani, incremental thoughts. The mid-cap side is doing better than the large caps. But the Nifty is also making a bit of a comeback from low point. Your thoughts and individual stocks?
Well, I would think, as long as we are below, say, 10,140 on the Nifty futures, which translates to 10,120 on the Nifty, and on the Bank Nifty, that level is probably 160 to about 200. These rallies should get sold into. There's a very mild rally coming back from the lows, it's nowhere. So the point is, if the rallies keep on getting shallower, then at some point 10,100 will become heavy. So the trade right now is to get short and remain short till the market proves it has enough strength to take higher levels out. Not falling is, I don't think, too much of a consolation. Okay. As far as individual stocks are concerned, today metals are really kind of taking it on the chin, breaking down. So good day to go short on metals. Hindalco is a sell with a stop of 238, target of 224. Vedanta is a sell with a stop of 285, target of 270. And Jet Airways is a buy with a stop of 680, target of 710.
Okay, Ashwani, any thoughts on stocks like Titagar Wagons, Bajaj Electricals, KPIT Technologies, all putting up a brave front?
See, these are portfolio stocks. These are not great trading stocks. So individual stocks can continue to do their own thing. And meanwhile, kind of maybe mid-cap players are feeling that 10,100 is going to hold. If that happens, these stocks can run up further. But in case, the broader market breaks down or post-RBI policy, the market takes a negative view, then all these, gains will get given up. So this is not a great time to be buying into mid-caps.
Okay, well, United Spirits is one stock that has hit a fresh high today. So keep an eye out on that. JP Morgan, in fact, has raised their target price to 35.80 from 26.85 earlier and raised their EPS forecast as well. Mitesh Thakkar and Sandeep Bagle are with us. Mitesh, morning. First, your call on United Spirits, and what are the other stocks you're looking at?
Yeah, United Spirits, in fact, continues to remain strong, and we've had buy calls in between over here. I think the target which I'm looking out for the stock to hit is closer to about 3,600. So I think there's still some more trading steam left, and traders are advised to hold on to this. The trading calls right now which I have one metal name as the sell call, that's Hindustan Zinc. Keep a stop at 297. Look for 270 as the target, and one mid-cap stock on the buy list, that's Dead Network. Keep a stop at 104 and look for targets of 118.
Okay. Thanks, Mitesh, for that. Sandeep, good morning to you. What are you trading?
Good morning, Lata. I would go with a sell in a Hero MotoCorp that's showing some weakness. The move can continue on the downside. Stop loss of 3501, target of 3436. And a buy in a Jet Airways, stop loss of 681, target of 711.
Okay, Ashwani, I have two stocks for you if you are tracking them: PC Jewelers and Havells, both at high point right now.
See, again, there are several stocks which are at high points, but the market needs to show follow through for all these moves to fructify. So if it's a portfolio buy, Havells has been sideways, for the longest time, 480, maybe like 530 on the upside. So nothing significant there. PC Jeweler, Titan, all of these stocks have been in strong uptrends. So if you plan to hold them for like 6 months, maybe these are great trades. But if you plan to hold it for the end of the day, they may not work out. That's the point. But PC Jeweler and Havells, if you compare, I think PC Jeweler is much better.
Okay, you know, the other stock, Shankara Bilcon, was the one that has been sneaking up, and, you know, it's a very steep rally that that stock has seen. Just pull up a 3-month of Shankara, or maybe a 6-month, and I think that will be the total trading time of the stock. I know these are difficult to read technical strategies into, but Mitesh?
See, Shankara Bilcon, Lata, I know I was not really tracking the stock, but I think it's just come back onto the radar. I think the way the stock has moved up, it's still showing signs of an uptrend, though. I think, you know, with an extremely overbought situation, a pullback is likely. So I think around 2050, 2070 is the area where I would want to see the stock take support and then turn from there.
Okay.
All right.
Just have one more stock. Ashwani, V-Guard is having a big move. Thoughts here?
See, V-Guard has been outperforming the market ever since you know, the results got fixed. So chances are, if you keep a 220 type of stock, pretty much Jet Airways type of stock chart, you could get maybe in the days to come 285, 290 also on V-Guard. But as we speak, the market is getting back to the lows of the day, so it will be more useful to get short on the metals.
All right, fair point. I guess we will keep needing your advice, and we will dip in, probably not on the hour but on the half hour, to seek trading strategies from all of you gentlemen. Thank you very much for joining us again at 10 with your 10 a.m. trades. Let's keep reminding you that it's Monetary Policy Day, and we would like to give you as much that we got of erudite opinion. The Citizens Monetary Policy Committee of CNBC TV18 also believes unanimously that it will be an RBI on pause mode. Just listen to a slice of their opinion, their justification for a status quo policy.
It has to be seen in the context of the first quarter. In the first quarter, you know, we do know what happened. It came down. There was a destocking issue. We knew the destocking was going to get sort of overcome in the second quarter. That showed up in manufacturing. The problem, of course, is we don't know, you know, where we are on the cycle.
Samiran, you know, the growth looks like needs less support now, would you say?
I don't think we need any particular stimulus at this moment, but at the same time, we should ensure that there are no more headwinds coming, which will kind of derail the growth process at this moment. Let's face it, that global growth it cuts both ways. While it helps us increasing exports, at the same time, we have to be worried about the commodity price impact coming out of it. So from that perspective, we have to be much more careful. We have just done significant structural reforms.
Sonal, let me get the global context as well in. Do you think the global growth is extremely positive? What should we expect in terms of rate cycles as well as global commodity prices? What should the MPC worry about?
The world that we are stepping into in 2018 as of now does appear like this Goldilocks kind of a scenario can continue for the foreseeable future, and a bit of policy normalization, you know, continuing from the Fed on both rate cycle and on the balance sheet normalization. The European Central Bank, we think, will announce you know, a tapering of its asset purchase program mid 2018, and we have a lot of other you know, global central banks also normalizing.
How worried should we be about inflation? I'll come to growth as well.
Yes.
But inflation?
Lata, so I think, you know, since the last review, you know, all the inflation risks have moved in one way. Oil prices are now 12% higher than they were when the RBI last met. They're 12% higher than what's presumed in the RBI's inflation forecast. You saw some unseasonal increase in vegetable prices. Global commodity prices, metals have gone up. But I think most importantly, if you look carefully at core inflation, and this is not trivial because you've got to adjust for petrol, diesel, housing, what you see surprisingly, or at least at the time, was that core momentum both in September and October was quite steep. Prices went up 0.5% month on month, seasonally adjusted, right? This was not GST related because the GST impact was July and August. Now that makes sense. If you look closely at the GDP numbers that came out, the headline understates the kind of recovery in the private sector. Adjusted for agriculture and government spending, we've gone from 3.8% in the first quarter to 5.5% to 6.8%. So now the pieces kind of add up that India's domestic recovery is nascent, it is occurring, maybe a little more strongly than the headline numbers suggest.
Soumya, I wanted the fiscal picture. One of the big problems that the MPC bothers about, will we see a fiscal slippage? How should the MPC add up those numbers?
See, in terms of the fiscal, I think there is a lot of consternation in the market in terms of a possible fiscal slippage.
Market is exactly where it was about half an hour back, so down about 0.3%, hanging on to 10,100, just a tad below that, in fact. Let's find out what's happening in the commodities market, because there's definitely more action there. Manisha, over to you. Good morning.
Thank you so much for that. Well, yes, starting with the crude oil prices, and we have opened on the lower side of the range there. The international markets also have gone in for some profit taking ahead of the US weekly inventory data, and that's what's mirroring here. So 0.7% on the lower side is how we've opened the crude prices here as well. But remember, there is not just the US weekly numbers coming in today. You also have the US non-farm payroll data on Friday. So it's a couple of events that these markets would take cues from. The gold and silver prices in the meanwhile have seen some support, but remember, we have been making lower lows when it comes to these precious metals. Gold prices trading very close to their 2-month lows, and the silver prices actually are at a 4.5-month lows as well. It has to do with the strength in US dollar, and also the fact that the physical buying in the Indian and the Asian markets is still on the weaker side, is not helping case when it comes to that. As I said, lower lows is what we are seeing, especially in this week being created for this one. The base metal prices in the meanwhile have been all over the place. We started from New York session yesterday, where there was profit taking, and it has continued in Shanghai as well. Some bit of an opportunity buying coming in for copper. Remember, that declined 4.5% in New York yesterday, and Shanghai has opened 3% on the weaker side. So some bit of a buying on the lower side is what we are seeing in the Asian markets. That is replicating in the Indian markets. But for all the other metals, it is still quite a bit in the red. The zinc and lead prices have declined 4% in last 24 hours. Nickel prices are down 6% between the New York and the European session. Asian markets as well have continued to decline. So there is no respite really when you look at these metals there. Trading strategies is what we have from KDR Commodities, and they have a couple of sell calls to start this day with. They have a sell on gold prices with a target of 28,750 on the lower side. They also are advising a sell in the metal space with copper prices. Sell on rallies to at 430 with 422 is the target for the intraday space today.
Okay, thank you very much for that, Manisha. Those set recommendations and the happenings in the metals market are clearly having a very important impact on the equity markets as well. While the markets in general are under the weather, it's the metal stocks that are leading the charge at this point in time. Hindalco down 3, Vedanta also down 3, and Tata Steel down 2%. But as we have been screaming on our flash lines, here's the big CNBC TV18 news break. Government sources suggest that there are discussions going on to extend the cut in corporate tax rate for larger companies in the upcoming budget itself. Shireen joins in with all the details that she has picked up. Shireen, this is a promised glide path. What will be delivered this budget itself?
Well, what will be delivered is the million-dollar question, Datta, but conversations are certainly on at this point in time. Remember, for the large universe of companies, the tax rate was cut and brought down to 25%. At the start of this government tenure, they had announced a glide path, so perhaps we could see some forward movement along those lines, but there is no final decision yet. I also want to point out that there is a meeting as part of the pre-budget consultation process of industry with the government today. And as part of those recommendations, which we see around this time pretty much every year, there is a big demand that has come in from industry for a significant reduction in the corporate tax rate. Now, how much of that is going to be possible or not will depend on the government's revenue constraints as well. What CII, for instance, is recommending is that given the context that the US Senate has approved a tax overhaul Saturday, United Kingdom plans to reduce the current rate of 20% to 17%. Singapore has a tax rate of 17%. Then India should include reducing the corporate tax rate to 18% all-inclusive at the earliest, is what their suggestion is, with the withdrawal of tax incentives and exemptions, and of course the withdrawal of surcharges and cesses. Where 18% is the ask, whether or not we are going to see any forward movement on this front is going to be the big question. Remember also that the Arvind Modi panel has been set up just a short while ago. So we will have to see whether the government would like to move ahead of that, because the recommendations of the Modi panel will come in only in about 6 months. But outside of that, there are some other important recommendations that they have made with respect to the GST, for instance. They are voting for a 3-rate GST structure, saying that standard or items of mass consumption should fall in that 12 to 18% bracket, and only demerit goods should be in the 28% bracket. So that's part of the recommendations, along with the, single registration, which continues to be a big demand that industry is making, and of course quarterly return filings, etc. But 2 or 3 other areas that I would like to flag as well. And one of the big areas they want the government to intervene on is the power sector, and they have flagged this as being one of the big concerns, the big worry areas, and they believe that the government must, sort of intervene and create a national power distribution company, and also address the stressed assets in the power sector. This is an area that they have articulated for significant reforms. Also on the bank recapitalization, there are 3 suggestions that CII is likely to make to the government. First, that banks may be permitted to reissue the recapitalization bonds, which can be purchased by institutional investors and even the general public. CII says it will help raise another 1.35 lakh crores. The second suggestion is to drive efficiency in the banking system, to lower the government stakes in banks, first to 52% and then progressively to 33%, and if required, preference shares be issued. And third, banks may also be permitted to securitize good loans and sell them. So this is part of the recommendations for the banking sector that CII intends to present to the government later today. So it's a multi-pronged list of recommendations, but the broad focus areas are, on some of these stressed sectors and intervention within those stressed sectors, more ease with respect to GST, more rate rationalization in the GST regime, and a cut in the corporate tax rate, which, as I pointed out, will depend on the government's revenue constraints.
Of course. Thank you very much for that, Shireen. Well, just on bank recapitalization, just the other day, the finance minister firmly ruled it out, saying political opinion at the moment doesn't favor privatization. But maybe 33% will not be considered privatization. That will still require huge legislative changes. But it is the tax rate cuts, especially the ask for 18%, that will be standout for markets and corporates. Ashok Wadhwa, the Group CEO of Ambit, joins us on the phone line. Ashok was to join us here. Traffic has kept him away, but we hope Ashok is going to reach very quickly. Ashok, we couldn't wait. We have to ask you this. This is what Shireen has picked up, that there will be further tax cuts in keeping with the glide path already announced by the government, and CII's ask is 18%. What do you think is rationally deliverable and must be delivered?
Lata, I think we should first in the background say that this government and this finance minister has pretty much stayed on the track of whatever he has said. Unlike in the past where we've had statements and visionary statements made, which sometimes become a little difficult to implement. This finance minister has strayed the track. He said, I will bring GST. He brought GST. He said, I will bring insolvency law. He brought in insolvency law. He said, I will, over a period of time, reduce corporate tax rates down to 25%. He made the first big move last year by reducing the rate to 25% for what he calls small and medium enterprises. Given revenue constraints and the government's great desire to maintain fiscal discipline, I can't see the tax rates going down to 18%, certainly not in a hurry. Having said that, is it possible that the finance minister will take the big step, despite revenue constraints, despite the desire to meet fiscal discipline in the current year and reduce the tax rates down to 25%? I think if that was to happen, the markets would cheer it. I think it would be consistent with the manner in which this finance minister has operated, delivering to whatever he says on a consistent basis. I wouldn't be surprised if there is a step back. Now, whether he can take it all the way to 25% or whether he will take a two-step approach, reduce it somewhat this year. And remember, this is the first year of GST implementation.
Yeah, Mr. Wadhwa, are you expecting at all that he can cut? Because as you say, GST first year, there is still a certain tentativeness about the indirect tax revenues for the government. But more importantly, it may also be the last budget. could be if the elections are advanced. And that's the last chance they have for the doubling of farm income and such other promises to be at least gotten closer to. And there is, of course, the fiscal pressure. So do you really expect that they will be able to cut rates for corporates at all in this budget?
Lata, here is what I would say. I would say difficult. Clearly, there are many more priorities for the government, as you rightly pointed out, given that this could be the last of perhaps the penultimate budget before the election period. The government has many more priorities. This is the first year of GST. We know the first 6 months have been slow from the government's collection perspective. The government is working hard. Told that the collections in this quarter are likely to be consistent with what everybody expected, a move upwards. So I would, Minister, did the corporate tax.
Okay. Oh.
Again.
Okay, Mr. Wadhwa, we have got you on a bad line. But no worries, Ashok Wadhwa is going to be joining us shortly. Actually, we had to catch him while he's in traffic because of this news break coming from Shireen. But now it's over to the primary market.
Yes, we will be speaking with Ashok Wadhwa once again. But before that, Future Group's logistic arm, Future Supply Chain Solutions IPO opens today. Interesting, the company plans to raise 650 crores via the public offer route, and we have the management with us. Sanjay Jain, the Group CFO of Future Group, joins us now to talk about that. Sanjay, good morning and thanks for joining us. You guys, the Future Supply Chain, the company is a third-party logistics supplier, and I was just going through the numbers. Contract logistics, which contributes almost 75% of your revenues, saw very good growth, almost 25% compounded growth over the last few years. Is that something that could continue even over the next few years?
Yeah, very much so. I think the best is in fact yet to come for the industry. Given the GST rollout, it's one nation, one tax. And prior to GST, all supply chain network of companies used to be primarily tax driven. You wanted to save local taxes. That's why you have small warehouses across various states. But now it is one nation, one tax. The supply chain network is now primarily going to be based on supply chain efficiency, cost optimization. So I believe that's one reason why this sector is bound to face a strong growth. Secondly, companies would increasingly focus on products, brands and customers. And anything like supply chain logistics, they want to leave it to specialists to handle it. And FSC over the last 10 years has built a strength in this area. Similar to what happened in the IT sector, 15 years back, increasingly companies started to focus on IT outsourcing. I think we all would be witnessing a similar trend now in the supply chain logistics sector, whereas 3PL is a way to go.
Okay, Sanjay, good morning. I'm just looking at your numbers and they have improved significantly over the last 2 years. But what's also improved is the revenue from group entities. That share has also improved from 47% to 70%. Is that likely to remain at 70, 72% kind of number?
Yeah, the group has done very well. Besides organic growth, the group has done a few acquisitions. As a result, the group size has grown. And somewhere that is reflecting in FSC's revenue share, coming in strongly from the anchor customer. But 2 points here to consider. One is that while the group revenue is close to 62% for FSC, the third-party business has grown twice over the last 5 years. It used to be close to 100 crore 5 years back. It is more than 200 crores. You name the leading automobile companies, you name the leading FMCG companies, the leading apparel companies, they're all doing business with FSC. Lastly, for the group, the logistics spend is close to 1,300, 1,400 crore, and FSC caters to just about 25% of that. So I guess anchor customer, third-party business, all are looking very well for future supply chain.
The recent capex that you did is not yet reflected in the numbers that we last have?
Yeah, it is in the net block. It is in the balance sheet.
No. I mean, in terms of revenues, you didn't have time to
it's running
harvest
about 30% utilization right now.
Okay.
And I think in about 3 to 4 quarters, we should see 100% utilization. So therefore, I agree with you that the current P&L does not really reflect the full potential. Just take a few months to ramp it up.
Okay. What is the percentage added by this capex?
When it run full fold, we spend about 80 crores on this capex. I think there is potential to do 4 to 5 times of that. So it run full potential. We should generate about 300 odd crores revenue from this.
Okay, one final question. You have a high working capital cycle in terms of your debtor days, which are almost, I think, 100 days. Plan to bring that down anytime soon?
It has actually been coming down. You know, in fact, our balance sheet is having 60 crore plus of cash on 30th September. It's a very asset-light balance sheet. We have brought it down from close to 140 days to close to 100 days or so. And I see every reason to further bring it down. In fact, to us, management, the mandate from the board is you want to grow, but squeeze cash from the balance sheet and then, you know, pump it into growth.
All right, Sanjay, thanks a lot for your time today.
Welcome back. Anniversaries are special, and this is a landmark one for us. 18. What else can be better than to get the best and the brightest from the markets? Sunil Singhania, Global Head Equities at Reliance Capital, joins us now. Good morning, Sunil. It was very important for us to have you on the show today. Thank you for joining us. Let me get straight to business. Markets, are they looking toppish to you at all? Should we expect this to be the first significant correction?
First of all, at the outset, best wishes on completing 18th year. I think I've been fortunate, and it's been a pleasure to be associated with CNBC all these 18 years. So thank you for always having me. As far as the markets are concerned, you know, yes, I think in the near term, we have seen some correction. There have been some concerns relating to fiscal deficit. There is some apprehension due to the upcoming state elections. But I think these kind of 3, 4, 5% corrections are always a part and parcel of the game. Having said that, I think our view over the medium and long term continues to be as optimistic as ever. And we would consider these corrections as, you know, just a sort of a roadblock or a speed breaker over the journey which India has still to cover. So continue to be optimistic.
Okay, what about the Gujarat elections itself, Sunil? There are some opinion polls now giving the BJP even a minority and looking at a Congress government. If that were to happen, will that be a more than significant correction? What can the market dip to? What, 9.7, 9.6? What are you expecting?
So frankly, again, you know, politics is a very funny game, you know, and it can never be right. Having said that, the good thing is that the expectations have started to come down. And that is a positive because, you know, if the expectations are low, then obviously the impact to that extent is very minimal. Having said that, we have seen in the last 3-4 years that, you know, there have been a lot of instances where there have been negative surprises and the markets have had a sharp correction, but only for a very short duration, you know, whether you take the US elections, whether you take what happened with Brexit, whether you take some other events. So our view is that, yes, you know, in case there is a real surprise verdict, markets might get a little bit jittery in the near term. But I think over a longer term, market starts to look at how the economy is growing, how the corporate earnings are expected to grow. And I think on those both fronts, our view is that we are finally seeing an uptick happening, both in terms of the GDP growing a little bit faster and also corporate earnings coming back.
Okay. Sunil, hi, good morning. In fact, just a while back, we were speaking with your good friend Madhu Kela, and you know, he was telling us about his view on the capex cycle recovery, infrastructure, real estate. Those are sectors that he's betting on. Would you share his view?
So I think on the infrastructure side, we are finally seeing a lot of action on the ground. You know, earlier it was only announcements. I think finally we are seeing some large projects getting off the ground. You know, we are all residing in Bombay and we are seeing how the metro work is, you know, going on full speed. We are also seeing a lot of action in other parts of the country as far as the road network is concerned. Even on the metro front, a lot of cities are, you know, in the midst of implementation as far as their metro is concerned. A few cities have already seen the first phases being implemented, like Hyderabad, Jaipur, even, you know, partly Bangalore. On the airport front, we have seen Udan, you know, being launched. Maybe after a year or so, you'll see at least 80-90 new airports in the tier 2, tier 3 cities and towns being implemented. We are seeing a lot of action on the irrigation front. So finally, I think on the infrastructure front, there is a lot of action, and I would share that optimism. As far as real estate is concerned, yes, sales are slow. there have been massive long-term positive reforms like RERA which has taken place. So I think eventually that was again going to be a very clean sector to invest in. But I think in the near term, my preference would be more on the infrastructure space than the real estate space.
Okay, by the way, the market, the mid-cap index is in the green, and just look at PSU banks. Most of them are now at the high point of the day, led by the strongest of them, Indian Bank, of course. Apart from that, there are a couple of others like Allahabad Bank. I think State Bank of India is trying to move towards the high points. So a lot of these stocks are making a big move. Sunil, good morning. It's been a pleasure knowing you for last many years. Your thoughts on PSU banks? Do you think this is a good space to buy right now?
So I would say that it makes sense to be, looking at the corporate banks at this point of time. I think we have seen the worst as far as the NPA creation is concerned. From here on, there are a few sectors which were in trouble, which have started to revive predominantly on the metal front. We are also seeing, a move from the government towards, coming out with a long-term solution as far as NPA resolution is concerned. And though the NCLT might have near-term challenges because it's the first year of implementation, I think finally it's going to be a great, move for the banks. In the near term, yes, there has been a short-term inch up as far as interest rates is concerned. There might be some pressure as far as near-term margins are concerned. But I think eventually corporate banks should be looked at, very optimistically in the near to medium term. Having said that, our preference in the PSU pack has been more the larger banks. Our view is that the smaller banks are losing their moat. It is going to be very tough for them to attract savings as well as fixed deposits. Preference again, as I said, is largely in the larger PSU banks. Specifically, the largest PSU banks has a lot of underlying assets which are growing quite rapidly, whether it's the insurance companies or the mutual fund or some of the other ancillary businesses. So I think within the PSU pack, maybe the larger banks should be more preferred.
Sunil, would you incrementally replace your NBFC assets with more PSU assets, PSU bank assets?
So I would again put it in the other way. I think incrementally it makes sense to replace some of the retail lenders with maybe corporate lenders and asset gatherers, which would be wealth managers, life insurance companies, and asset management companies. Okay. I think on the NBFC or the retail lending space, people are entering this space. There is definitely pressure on margins because everyone is trying to, outdo each other with lower rates as far as the housing finance companies are concerned and so on and so forth. So maybe the preference has to be more corporate banks over retail banks in the near term.
Okay, well, when you turn 18, Sunil, you get a lot of advice from your teachers, your elders, your peers. And since we've turned 18 today, what would be the advice that you would give all the retail investors who are listening to you right now? Stock advice is more than welcome.
So I would say that, CNBC reflects the Indian economy. So the Indian economy is just about turned an adult. There is a long way to go for the Indian economy and the Indian markets. Have confidence. You have just turned 18. I think there is still a long, long life to go. So be optimistic, be positive. Don't worry about near-term events. I think all these near-term events have been great buying opportunities, and you'll make a lot of wealth.
Okay, thank you very much. Personally, it sounds very great to be told again and again that I am 18. Thank you very much, Sunil Singhania, for joining us today with your thoughts. It's a big day for us, and it was very important for us to have you with us. Thank you for joining us. Well, when we wind down on Bazaar, we can at least have the satisfaction of saying that mid-caps are back in the green. Let's see if the market is able to pull itself, if today is that crunching fall, and the markets will recover by end of day. We have to wait and see. A lot of trading ideas coming up for you on Chartbusters as well.